With no silver bullet for the economy, the Fed fired a shotgun blast. In slashing its benchmark interest rate to the lowest level ever, the Fed said rates were likely to remain at exceptionally low levels for some time. Bernanke and company also promised to use all available tools to turn the economy around. Translation, a Fed spending spree.
And they will probably start buying anything and everything to try to get money into the financial system.
Including buying up bad mortgage and credit card loans from banks, so they have more money to lend, which should also drive down interest rates.
Is that the primary weapon they have at this point?
That's the primary weapon they have.
Economist Michael Darda says businesses are not investing and consumers are pulling back.
So it really leaves the federal government and the Federal Reserve as sort of the spenders of last resort, if you will. And the Federal Reserve is the only institution that can actually create money out of thin air.
The Fed's balance sheet, which was less than $1 trillion back in September, is now expected to more than triple to $3 trillion. But despite the Fed's drastic interest rate cuts, a 30-year fixed-rate mortgage is still 5.5%, a car loan more than 6%, a home equity loan more than 8%, and credit card interest rates more than 14%.
Most importantly, the key is the job market. I mean, it doesn't really matter what the interest rate is if people are nervous about their jobs.
That's where a new stimulus package to help create jobs is expected to come in. The number being floated is $600 billion, but some predict it could hit $1 trillion, as economists see a growing risk that unemployment could be headed for double digits, possibly 10%. Katie?
And Anthony, as we mentioned, the market was up more than 350 points, most of it after the Fed's announcement. So Wall Street was really happy to hear this news.
They were, Katie, because they saw two key things. First, not only did the Fed knock rates to zero, but they said we're going to keep them here as long as it takes. Second, the Fed said we're going to spend as much as it takes to get credit moving. The key thing here is getting mortgage rates down, maybe as low as 4%, to try to put a bottom under the housing market.
All right. Anthony Mason. Anthony, thank you.